We bought the agency for Sam Zell said, I want to be the chairman of everything and the CEO of nothing. I made over $2 million in M&A mistakes so that you guys don't have to, right? I didn't like it because it was too small of an opportunity. And the way to make it a bigger opportunity, which Hermosi told us what to do, it's not what I wanted to do. Yo, what is going on, All right, so guys, this is a culmination of me going through the M&A process a couple times in the agency space. I've made a lot of mistakes and things that I don't want you to repeat. So ultimately, what we're talking about today is how to build a sellable agency, why build it to sell. And then we're also going to be breaking down how to increase enterprise value. My $1 million mistake, I literally made $1 million mistake that cost me over $1 million in the M&A space, and you guys don't want to make the same mistake. But I'm going to be going through that later on so that you can mitigate that. Agency valuation, the entire exit process, literally from A to Z, like what you can expect, how it works, all that good stuff, because it's a very complicated process. No one ever taught me what it was until I just started doing it. And the deal team that you're actually going to need in order to exit, right? Who are the people that you need in your circle that are going to tell you and show you exactly how to close the transaction, find the buyer, handle all the legal stuff, the financial stuff. There's a lot of moving parts. So let's go ahead and break it down. So why build to sell in the first place? I talk to so many agency owners and they're like, I don't know if I want to sell it. And that's when they're in this honeymoon phase of the agency. Some of you guys are in it right now on the call. Some of you guys are like, please get me out of this thing. I hate it. Right. And whatever stage that you're in, I'm assuming you've been through the honeymoon phase. Now, whether or not you sell or don't sell, you always want to build it to sell because a sellable agency is a strong agency. Matt and I bought a State AI to sell it, right? Most people don't know we bought the agency. We bought the agency and we bought it with the intention to sell it. Now, throughout that entire journey of us having the agency, we change our perspective from do we sell it? Do we keep it? Do we sell it? Do we keep it? Right. And typically when we're like, oh, I don't want to sell, it's when things were going really, really good. Right. But also there, as you guys know, we live in the agency space. We live in a business space. Things go up and they go down. There's peaks and there's valleys. So you always want to build it to sell because you want to keep your options open. Right. So if you want a good agency, you're going to be in it for 3 years, right? Minimum. A lot can change in 3 years once again. And you should build the company so well that everyone wants to buy it, but you don't want to sell it because it's such a strong company, right? So just because you build it to sell doesn't mean you actually have to sell. You're building it to sell not because you want to get a 1 million, 2 million, $3 million exit in 2, 3 years. You're building it to sell because you want to build such a strong company that you literally don't want to sell. That's how good your company should be. That's how good your agency should be. A lot of people I asked, do you see yourself being in the agency space for 3, 4, 5 years? The answer is no. That was the same answer for me. And you know why? It's because we never built the agency that well. Most people don't build the agency well enough. So I challenge you on this call to figure out what you could do to make it a viable business for you to be comfortable doing for the next 5, 10 years. And it's not because like you don't like the agency models, because you're not good at certain things in the agency model that are super hard. But if the agency model is all a walk in the park, think of your best day on the agency. And if you could do that every single day, what would that agency look like? What would you have to be doing on a consistent basis in order to achieve that result every single day? It's possible. I know people out there that have very successful agencies. They love it and they do that. And it's not always about revenue, guys. It's not always about the monetary metrics. So we'll break that down here in a second. We bought the agency for $60,000. I don't think this has ever been shared online, but we bought a State AI for $60,000. It was worth $60,000, right? We increased the value by about 35x, 3,500% in just about 19 months. And this is the broker valuation, which once again has never been shared on the internet. And I'll basically break it down. It was essentially value. Well, this is not what the broker valued it at. This is actually what the buyer valued it at, which they valued it a little bit lower. But I'll break down the broker valuation, the difference between broker broker valuation versus buyer valuation and all of that stuff and how that works. Right. Our agency was valued at $2,035,136. And yeah, that's pretty much what a stated I was worth. At least that's what the first buyer said it was worth, right? We got multiple valuations, and I'll break all of that down here in a second. All right. So my formula for increasing enterprise value, that's the first thing that I want to talk about on this list. So we talked about why build to sell, increase enterprise value. And if you guys have questions, start dropping them in the chat. So enterprise value, for those of you guys that don't know, is basically what the company is worth at the end of the day, right? What is your agency worth? Does anyone know in this chat right now how much their agency is worth? Just out of curiosity. Anyone? No. You guys have All right. I got some pretty funny responses in here. All right, never mind. Those are not the answers I wanted to hear. So a lot of you guys need to completely fix your valuations because that's not a pretty sight that I see. If you don't know what your agency's worth, it's probably not worth that much if you've never looked into it. Just to be honest. All right. So first things first, there's no specific order about like what steps I would take. I mean, I could tell you what my specific order would be, but I don't have a specific order on here. Low concentration, right? You want less than 5% of your revenue coming from one client. There's a lot of agencies out there that literally, like, there's a Cairo agency that I know. They literally have one client that's like 60 to 70% of their revenue. It's absolutely absurd, super difficult to exit with something like that, especially if you only have like a 12-month agreement. That's super dangerous. That's a huge risk, huge liability. It's not even like, if you look at a balance sheet, it's not an asset to have a big contract like that. That is a massive liability in my eyes. I don't think most of you guys have this issue, so I'm not going to gloss over this by much, but this is why I prefer high MRR versus the PIF model, because that also kind of feeds into the concentration play. But we'll break that down a little bit more. Leaders and more leaders, right? I just came off a podcast with John Ali, and we were talking about leadership for literally, the podcast was an hour and a half long. Leadership was an hour of the entire podcast, because of how important this is, because we were talking about how to build sellable agencies, similar to what I'm talking to you guys about. And it's all about leaders and more leaders and more leaders and more leaders. You want to remove, well, before I dive into that, let's break this one thing down. Investors don't want to buy your job. They want to buy an asset. Some of you guys know this stuff already, but just to reinforce it in your mind, investors don't want to buy a job. They want to buy an asset. So John Ali taught me this one thing that changed the game. Automation is not abdication. A lot of people, they bring on a leadership team and they abdicate. Abdication basically means like you just let it be, you never touch it, and like you never pay it any attention. You kind of just walk away from it, right? You pay it no mind. But that's not what we're trying to achieve here with the agency space. A lot of people throw around the term automation, automation, automation. Guys, no one here is automating their agency completely. It's just not reality, guys. What I mean from an automated agency, I'm talking about 2 to 3 hours a week working in the agency on leadership meetings. That's probably as close as automated as you're going to get, unless you're looking for $500 to $1 million a month range. And then sure, you can bring on, you can truly transition to the board of directors and have an automated agency. But even then, you're on the board of directors. So how automated is it truly? My first agency burnt down because I abandoned the team and they were fully capable, but there were no leaders to oversee the day-to-day operations. And a lot of you guys make this mistake, and I made this mistake. You bring on managers and then you start backing away from the agency. The agency's working smoothly, right? You have salespeople, you have a CSM, you have a media buyer. Literally, you're not in the front lines at all in the agency, and you spend your time doing things that, quite frankly, aren't actually contributing to macro growth in the agency, but you're doing it because you have nothing else to do. And you just wait in Slack all day, you wait for something to pop up, but that's not the way the agency should be ran. That's not a true automated agency. What you're doing is actually just waiting for the fires to come up. But a true automated agency, or an agency that's close to automate, is an agency that prevents the fires without you being there. And that requires a whole nother level of separation from your frontline team, which then goes into managers for managers. So Guys, a captain of a good ship never rushes to put his first mate in charge, right? If you have a good business, you shouldn't be burning to get out of the day to day, right? But the goal is to only have one or two direct reports, right? The captain of a good ship only has one or two direct reports. He's got his navigator and he's got his first officer, right? And then those two people have they report to a bunch of other people, right? They manage a bunch of other people on the ship on the bridge, right? Um, and what you guys want to accomplish, one second, is, for example, if you have three salespeople, two media buyers, two CSMs, that's three different departments, right? Every single department needs its own manager because the job is not done. If you are managing the sales team, the media buying team, the CSM team, and you don't have a manager in place, and you could have a really qualified employee who knows what they're doing and you never really talk to them, that's still not the way you want to run the agency. Things will come burning down. It's just a matter of time. Trust me, right? You are a glorified babysitter if you don't have managers for all your departments. Sam Zell said, I want to be the chairman of everything and the CEO of nothing. That should be your objective with the agency, right? So who's heard on work on the business and not in it? Drop a one in the chat if you've heard work on the business, not in the business. I probably have mentioned that to you guys many times before in one-on-one calls, etc. I'm actually going to say something a little controversial. You really don't want either one of those guys. This is where Matt and I royally messed up to the 10th degree, right? Every department had a manager, but who managed the managers, right? There could be a sales manager, there could be a head of client success, there could be a media buyer or fulfillment manager, right? But who is overseeing those people? You might be, but in reality, you guys are so removed from the agency, you're so removed from the day to day, and you're not doing the little nitty gritty things that a general manager should be doing because you feel like everything's going smoothly at this stage, right? But that's super, super dangerous. There's something that creates value, and then there's something that is valuable. And that is a big thing that a lot of people don't understand. If you're like Oliver, who's not on this call, but I told him I was going to call him out, right? And you close all the deals yourself. He's got a strong agency, good revenue, not Ollie Coates, Oliver Kahn, right? He's closing all the deals himself. And he creates value. Ollie creates value, but he doesn't have anything that's valuable. He's the key man risk in his agency. It's a massive key man risk, and no one wants to buy that. And as soon as you're able to step away from the day-to-day operations, you should do that, right? You should go ahead, plug team and members in. It doesn't mean you got to step away from doing it. It means that you need someone else in there to protect your downside so that there's not a key man risk. It's not just a key man risk for the buyer of the agency, it's a key man risk for the agency itself. What happens if you get sick? What happens if something happens in your family? Right? There's so many possible liabilities with that. So the longer it takes for you guys to get out of the positions, the harder it becomes over time. And the value of the company diminishes when the most valuable part is so centered around you, the founder, the CEO. You need an operator and a GM, right? So let's visualize it like this. You have your sales team, you have your client success team, you have your media buying team. Every single one of those departments has a manager, but then there is an operator slash a general manager overseeing all three of those managers. Every sub manager reports to the general manager, and the general manager reports to you. Right. And you're basically telling well, I'll break that down here in a second, but you're essentially telling the general manager where you want to go. Your objective should be to sit on the board if you want a sellable agency and do nothing aside from talking to the operator. Right. But it takes a lot of work. I mentioned that earlier on in the call. Most people don't have a truly automated agency. Most people can't actually sit on the board. You can, but no one really knows how to do it. So let's go to break it down. The job of the general manager is basically to become your Santa Claus. So imagine you're in the mall and you sit on Santa's lap, right? And the general manager is Santa Claus, right? Your job is to tell Santa, the general manager, what you want, what the North Star is. And then they go out and execute, right? like Jeff Bezos or Elon Musk, right? So do you think Jeff Bezos is out there packing packages for Amazon? Do you think he's coming up with AI systems for robots to replace his employees? No, he's telling the team where he wants to go. Do you think Elon Musk is out there building rockets? He's literally pointing toward Mars and saying, we're going there. And then his team just goes ahead and they start executing. They start doing it. That should be the objective of your company. But most of you guys are not integrators. Most of you guys are visionaries, and you can never achieve this level of delegation because you don't have the integrator in the business. You have to have the integrator, which is why you need the general manager. And this is going to massively increase your enterprise value when you sell the agency. Now, a lot of you guys already know this stuff, but knowledge isn't power. Applied knowledge is power. None of you guys on this call has an agency like this, period. And it's going to lead to a lot of chaos and disaster for you at some point. The further away you are from the front lines, the more valuable your agency becomes, right? The further away you are from the front lines, the more valuable your agency becomes. But there's more. Why is it that McDonald's has a market cap of literally $181 billion, all from franchising their restaurants and flipping burgers all over the world across thousands of locations, and most agencies can barely scale past 20 clients selling copy and paste lead gen systems? It's kind of embarrassing, I'm not gonna lie. It comes down to one thing, right? McDonald's keeps things simple and systematizes everything. They have a franchise playbook. These are few, there are few strategic buyers out there, guys, that are looking for agencies our size. And I'll break down what a strategic buyer means. But that's everything that you need from a leadership team, right? You need that general manager, and then every department needs a sub manager or a team lead that can report to the general manager. Regarding the strategic buyer, so let's break down the types of buyers for agencies. There's going to be a strategic buyer, an institutional buyer, or a investor, essentially, someone that just has a lot of money and wants extra cash flow. Strategic buyers are other companies or businesses that would acquire the company to complement its current operations, right? So let's say I have a I don't know. Let's say I have a real estate marketing agency, right? And then there's another real estate marketing agency, but they don't do lead gen. They do websites, but they want to tack on lead gen rather than finding the team, figuring out how to acquire lead gen clients, all that hard stuff. They would rather just acquire an agency. That's a strategic buyer. But once again, the chances of a strategic buyer buying your agency at this level is very, very slow, meaning everything needs to be systematized because your typical buyer is going to be an investor, someone that knows absolutely nothing about the agency space, about tech, about automations, or any of that good stuff. So what does it actually mean? I'm going to try to get through this because I want to make sure there's time at the end for questions, guys. Most investors will think the business we're in is super complicated, right? You're talking to a lot of older people. You're not talking to people in your 20s, guys, buying $1 million agencies. That's not what's happening. You're talking to people in your 40s, 50s, 60s. Our buyer literally, probably walked around with a cane. To be quite frank with you, he was old. Most investors will think the business, once again, is super complicated. So that means they need a proven process and SOPs for everything. It's not going to prevent you from being sold, but it may lower your valuation and it'll definitely worsen your terms. So that basically means a longer transition. And you might say, oh, I don't mind about transitioning for 3 months, basically transitioning the new owner or you to the new owner and all the responsibilities. In reality, guys, once you sell, I promise you, you're going to want to get out as quickly as possible. And we had a 1 year transition period with a 3 year board position. Those were the terms of our original agreement. And it was an absolute disaster, right? We did not want to be involved in the agency for that long. So you want to set yourself up for success now. And you can do these little things that can make sure that your transition period only needs to be 30 days, 60 days, 90 days. And that's just going to help your peace of mind. Trust me. And you guys need to make sure you have something like an SOP vault. I know most of you guys have this, but it's probably not organized. It's probably not updated. Every single one of your SOPs, guys, needs to be somewhere in some sort of vault. If I click on any of these, it has the video files and then it'll have the exact steps. And then I can go to different roles and have SOPs for that too. You need a very clear vault that you can show a buyer and literally say, hey, look, here's everything that you'll need to run the agency. It's literally copy and paste. You can go ahead and hire a 15-year-old to do this job. And if you can show a buyer that's going to massively improve the chances of them saying, you know what, this is a simple business versus them complicating it and then deepening the due diligence process, overcomplicating the entire deal, which is exactly what happened with our agency. Even though we had all the SOPs in place, we weren't, articulate enough, or we didn't figure out a way to show the buyer that, hey, this is a really simple business. It's not complex at all. And that's why you guys need something like that that's going to help you out with your process. Most business problems can be solved with math. So when Hermosi, and when we were talking to Hermosi about joining the portfolio, he asked us for a bunch of KPIs, and we didn't have anything, to be honest with you, right? Your buyers are going to ask you guys for a lot of KPIs. Most of you guys don't even have proper data tracking in place. And you think that it's not that important now, but it's literally preventing you from accomplishing really, really important things in the business. Like every single metric, and I'm going to break down the metrics that you need here in a sec, the most important metrics, but you want to track everything. Even if you don't think that you're going to need it right now, anything that has an end outcome, anything that can result in some positive or negative outcome, you need to track some sort of tangible input or metric that's going to have an impact on that outcome. Everything. Even if you guys don't like look at it or anything, just have the numbers because you can always go back to it in 6 months' time and 12 months' time. Once you pay off a lot of ignorance, then you realize, oh shoot, I should probably know what this number is. And then you're going to be able to go back and you're going to have the numbers because you actually started tracking it. These are the most important KPIs. For the agency. LTV, revenue per head, this is key. This is so important, so undervalued. You guys want a revenue per head above 15K, right? Net margins, scheduled appointments, lead efficiency percentage, right? What's your drop-off rate? That's pretty much what this is telling me. Live calls, live call close rate, average cash per sale, front end ROAS, rev ROAS, average days with us, that's clients average with you, your churn rate, your NPS, which basically is like a rating to see how likely people are to recommend your company that are current clients. And then you also want an employee NPS. This is going to tell you if your team is happy, right? If you can show all of this data to a potential buyer in the future, oh my goodness. Oh my goodness. It's going to significantly speed up the entire process, the entire acquisition. And they're going to feel a lot more comfortable because they have true data and not just, yeah, our team's happy. Buyers aren't going to, guys, these people are smart. They're not going to drop millions of dollars on your agency just based off what your qualitative data is. They want to see quantitative data. New cash collection, total cash collection, all of that good jazz. Those are the KPIs that you guys need. If you have questions about how to track it, all of that good stuff later, I can help you with that. I'm currently working on a brand new KPI tracker that encompasses media buying, client success, finances, sales, everything that you need, and also operations, everything that you need for agency KPI tracker into one simple tracker. I don't want to make it too complicated, but it'll be everything that you'll need that'll definitely impress the buyer. And we'll be giving that to you guys. So speaking of data and trend lines, right? No one wants a stock that has a roller coaster trend line. Value is better than growth stocks. We don't want to create a rapidly growing company. We want a stable company that consistently generates profits. I'm talking about less than 5% growth month over month. All right. And that's going to sound crazy. There's a time and a place to grow, and then there's a time and a place to heal. And I learned all this because I was the guy who always wanted to grow, and it only led to chaos and disaster at a certain point. So month one, 30K, month two, 120K, month three, 250K, month four, 125K. That is absolutely hideous. It's going to scare any, serious buyer away. You might get some crazy buyers, but those are people that don't understand business and they're not going to be able to fund the deal at the end of the day. It doesn't matter, guys, if you get offers. It doesn't matter if you get buyers. What you want are buyers and offers that can actually afford it and will actually buy the company. You want to increase the likelihood of you selling. Most deals actually fall through. Only 1 out of 10 businesses that get listed actually sell. Do you want your business to be the 9 out of 10 or the 1 out of 10, right? If you want it to be one of the 1 out of 10s, you need to have this, everything that I said in this document and I'm about to break down, you want all this stuff dialed in. Month one, 60K. Month two, 65K. Month three, 70K. Month four, 75K, right? That's the type of growth that you actually want in an agency. Now, in the beginning, you can have the rapid growth to 100K. That's okay. But at a certain point, you have to get off that dopamine hit and you have to be willing to say, I'm comfortable with a little bit of consistent month over month growth. And I'm not going to get that consistent month over month growth by focusing on PIFs. I'm getting that consistent month over month growth by focusing on MRR, right? In a 5K race, there's two people, right? One person is running 2 times faster. One person is obviously a lot slower. Who wins? It's not necessarily the person running 2 times faster. It took me a long time to realize this, guys. A really, really long time. It's the person. I literally have a video on YouTube on how to go from 0 to 7 figures in 30 days. Like, guys, I used to be that guy. I used to be the guy who would speed stuff up and scale quickly, and I could do it. And I could do it again, and I could show all of you guys how to do it. But it only leads to one outcome at the end of the day, and it's a very dangerous one. It's the person who has the most stamina. Doesn't matter if you're 2 times faster, if you never make it to the finish line. Most agencies are too focused on the quick cash, so they never make the big cash. So I want to talk to you guys about a story. Um, who's heard of the goose and the golden egg? Anyone? A few people. All right. So regarding the goose and the golden egg, there was once a countryman, right? He possessed the most wonderful goose that you can imagine. For every day, when he visited the nest, the goose had laid a beautiful, glittering golden egg. The countryman took the eggs to market and soon began to get rich. But it was not long before he grew impatient with the goose because she gave him only a single golden egg a day. He was not getting rich fast enough. Then, one day, after he had finished counting his money, the idea came to him that he could get all the golden eggs at once by killing the goose and cutting it open. But when the deed was done, not a single golden egg did he find, and his precious goose was dead. And he lost his golden egg goose because he was trying to get rich too quickly. So, with that being said, guys, most agency owners make short-term decisions. Here are the long-term decisions that you need to make right now. MRR over PIFs, LTV over new cash collected, 6 and 12-month contracts. You hire slow and you fire even slower. We want tenure, right? An agency, someone coming to buy an agency that doesn't want to see that I was talking to Brett, and I don't know if you guys know Brett. He used to run an agency called Patient Rhino. He was in the med spa space, multi 7 figure exit. I can't tell you the number, but he had a huge exit in the agency space. And the shortest tenured employee on his team was 2 years. The shortest tenured. Once again, the shortest tenured person. Some of you guys are literally going through employees left and right. You know why? Not because talent sucks, but because you guys don't know how to lead a team. Because you guys are bad leaders. That's why. And you're doing a massive disservice to your team, and you can't figure out how to crack the code. But it's not that hard. It's hard. It's easy for me to say, but it was hard for me too, right? But I promise you, once you crack the code, it's not that hard. It's not that hard. And as a result, when someone comes in to buy your agency and they see that you have a bunch of employees that are like a month old, 2 months old, the longest term employee was 6 months, it is pathetic. Absolutely pathetic. And no one's gonna want to buy that, guys, because people know that human potential is one, especially these smart investors. They know that human potential is one of the most important things when it comes to buying business. Because without in a service-based business, your team is everything. They are doing the service. There's only so much AI can do. There's only so much Zapier can do. Your human potential is the key. So a smart investor is going to come in. They're going to see that no one on your team has tenure. They haven't gone through the ups and downs of the business. And that's going to be a massive red flag. If it was me, I would never touching that agency. Any smart investor is never touching that agency. Build good culture, learn how to lead a team, and start keeping your team long like you keep your clients. People focus on LTV for their clients, but they don't focus on LTV for their team. You want your team to retain as well. Team churn is a real thing. One acquisition system is a liability, two is an asset. All right. So how does this M&A crap work? Let's go ahead and break down the process. Cool. All right. So number one, you get the agency valued with a business broker. I can probably do quick valuations on all your agencies, tell you exactly what they're worth right now. Then you get the agency listed if you choose to, right? From there, copy that twice. You get the agency listed again, right? Then I'm sorry, what it should say is you pick a broker. So you get the agency valued, then you pick a broker, then you get the agency listed, right? You actually want to interview multiple brokers. Then you want to interview attorneys and CPAs because you have the agency listed. It's going to take probably about 30 to 60 days before you start getting any interested LOIs or a letter of intent, right? So you want to start having an attorney, a CPA on standby so that they can help you with that. Then you want to have buyer meet and greets, right? Those are going to be people that you're talking with in the process. They're interested in buying the agency. They want to get to know you, and you're literally it's a friendly conversation. It's not scary at all. I thought it was going to be, but it's literally just telling your story. If you guys have ever done a podcast, it's literally like doing a podcast. That's what these buyer meet and greets are like. Then you're going to review LOIs that get submitted. That's a letter of intent. It basically expresses someone's interested in buying your company. You negotiate on the terms. If you reach some sort of mutual conclusion, then you go ahead and you go under contract. You accept the LOI. You start due diligence. There's legal due diligence, cultural due diligence, and financial due diligence, which I'm going to break down here in a second. All right. From there, by the way, guys, if you're getting value, drop a zero in the chat. If this is boring, I'm sorry, but this is the big money, guys. This isn't the quick money. This isn't how to get rich overnight. This is how to get rich for sure. Right. So this is what an LOI template looks like, guys. So this was our buyer, and I can't really show that information, but that was our buyer. This was his original offer. It shows the terms of everything. It um shows the due diligence stuff. Um, it just basically breaks down what the potential due diligence period will look like. Make sure you guys get that reviewed by an attorney. LOIs are normally not legally binding, but you still want an attorney to review just because it's going to make it easier to negotiate later on. A lot of times people will put like they'll say anything in the LOI just to get a deal across. They'll bring you down through due diligence, which could take 3 to 6 months, and then they'll completely change the terms at the end. And you're like, well, I'm gonna sign it because I don't feel like going through due diligence for another 6 months with a new buyer. Um, FISBOs or brokers, right? So you could sell it yourself, so for sale by owner, or you can use a broker. A broker is going to take 10% success fee and a potential retainer. Like our broker charged us $5,000 a month. Plus, they took 10% of the total purchase price of the company. So they were going to make, a few $100,000. Then we have the data room, right? The data room is this big Google Drive folder of everything about the business, all your contracts, your legal, like all your staff, like a bunch of questions. Everything's going to be in this massive data room, right? That's what due diligence is going to look like. There's the buyer CPA, the attorney, they're all going to look through the data room and they're going to request a list of documents, resources, things that they're going to need from you in order to actually get this. And a lot of you guys are probably like, this is so long term out. Like, why do I need to start thinking about this? Guys, you need to understand how this process works now. If I would have understood how the process worked and the importance of all these little things, the valuation would have been better. The process would have been way smoother, and I wouldn't have made as many mistakes as I made. Due diligence, legal, and financial. Here is what the contract looks like, guys. This is an actual marketing agency contract for buying a marketing agency. This is the draft version. I didn't show you guys the real version because I don't think I'm legally allowed to. So, as you can see, there's 71 freaking pages, and you would think that an attorney goes through everything, but literally the attorney has to sit down with you and go through everything line by line. Worst parts of my entire life was reading and going through this entire agreement with the attorney. Can you guys hear me okay? Or is it, am I frozen or everyone's muted, so I can't tell.
You're lagging, bro.
I'm gonna turn my camera off. Is that better? Can you guys hear me?
Much. Yeah.
Yo, can you guys hear me? All right,
Yeah.
sorry about that. I'm gonna keep my camera off just in case. Um, it's the Jersey internet, unfortunately. All right, so that's the contract, guys. That's the template. Then emotional roller coaster, right? I want to prepare you guys. So when it comes to going through the sales process, guys, you want to literally act as if you're not selling the agency. One of the biggest mistakes that you can make is start counting all the money. Like what I did is I made a list of all the things I was going to buy or invest in once I sold the agency. The challenge is the process took significantly longer than we expected, and it didn't go the way that we wanted it to go. And it was a complete emotional roller coaster. It was a very dark period for me. And I would just, recommend that you guys pretend like you're never selling. You run the business as is. You don't act as though like, hey, you're gonna sell it. So you don't have to do like long-term things that are gonna make sure that the business is stable. Like you can't just start making short-term decisions because you think you're gonna exit, because it might not happen, right? But it's super hard when you have a big check being dangled in front of you daily. So all in all, just act as if you're not selling the agency. All right. So I made over $2 million in M&A mistakes so that you guys don't have to. All right. Number one, have a lawyer review everything, even non-binding agreements. That comes down to the LOI. I'm going to break down all my mistakes. I'm going to try to go rapid fire so that we have time for Q&A at the end. So the new owner will take some of the cash in your bank. Typically, if it's a stock sale, you want to minimize this, right? Our buyer attempted to take $250,000 and keep it as operating expenses. We negotiated down to $150 to $200,000. Big win, I know. Consult with someone who has exited before, right? There was count. Oh, and what this is, guys, this is basically the LOI from the working capital agreement, right? So to calculate the working capital, we get the monthly closing balance sheets of the previous 12 months and then get an average. The challenge is Matt and I kept a lot of money in the bank, at least the business bank account, because we didn't like need it. Like we weren't like splurging money. Challenge is you guys don't want to do that when you're getting ready to exit, because what they're going to go ahead and do is say, oh, all of that's working capital. So that means that's what the cash balances are required to run this business. But in reality, they're not. So you want to protect yourself. This literal tip right here can save you guys a couple $100,000. If we would have known this, I mean, all in reality, guys, the only working capital an agency needs below $2 million a year is probably $50,000 to $100,000 left in the bank. And that's going to be left in the bank for the buyer to use typically. That's typically how it's negotiated, right? So consult with someone who has exited before you guys exit. There was countless red flags that we could have caught if we would have just spoke with someone who has literally done it before. Um, and I would have known to change the way that they determine the cash requirement in the bank. I would have known to just wait one more year to have 3 solid years of tax returns to improve the terms. I would have known not to pay a broker $5,000 a month in addition to a success fee because the incentives weren't aligned. I would have known my broker was not my coach. I would have known not to take my foot off the gas and to double down on the agency. I could have avoided so many mistakes. One of the last things, guys, verify proof of funds. So after 8 long months of due diligence, of legal and financial and all this questions and interrogations, we found out our first buyer didn't have the funds to acquire the business. He didn't have the money to buy the agency. So make sure you know exactly how they're getting the funding. Do not rely on your broker to verify proof of funds. You want to literally see either the proof of fund letter from the bank that they're getting a loan from or the money sitting in their account. If you don't, and then also, guys, have them put down some sort of earnest money when you go under due diligence, when you go under contract, meaning they need to put down $10,000, $20,000. Normally it's 1% of the deal size. Um, and that's kind of like the deposit that makes sure that they're serious. We did not do that. Even though we pushed for it, we didn't push hard enough, right? So let's see how much your agency is worth. Let's break this down. So EBITDA, guys, is BS. A lot of people think EBITDA is the metric that we're looking at. EBITDA is not what we're looking at. We're looking at SDE, which stands for seller discretionary earnings. It is the only thing that actually matters. So let's talk about add backs, right? That's basically what SDE is. SDE is add backs, and it basically means travel, dinners, Coming to the agency bootcamp live event April 12th, 2025, next year, right? Team retreats, coaching, all of these little things are add backs that you get to add back into the business. And these are things that are going to increase your valuation, right? We don't want to get valued with EBITDA. We want to get valued with SDE. And we get to add all of this back. So for us, our total annual add backs was about $167,000 a year. And for context, guys, for every dollar of profit is $3 in added valuation because an agency will typically sell for 3 times. Not always, but this is what you can expect. So you can't take your most recent or best years and then multiply it by 3. It's normally a weighted scale. So it's going to typically be an average of the last 3 years. So for example, year one, you made $100,000 in profit. Year two, you made $300,000 in profit. Year three, you made $200,000 in profit, right? You can't just take year two and say, oh, I made $300,000. My agency's worth 3x of that. No, it's going to be a 3-year average. So your 3-year average is 200,000. So your agency is worth around $600,000, and that's SDE. So that's including all the add backs, right? All the things that aren't necessary to the operation of the business, you get to add back as extra value for your agency. So once again, every dollar of profit, which is why we talk about profit, because revenue is vanity. Every dollar of profit you make in your agency right now is adding an extra $3 when you go decide to sell. So that's why it's super important to make sure you're looking at all of your expenses, making sure that you're trimming the fat and not overspending in the wrong areas, right? Especially if you can't add it back. Now, luckily, a lot of these things you can add back that aren't necessary to the business operations, right? All right, guys, we're almost done. So, deal team, right? You guys need to have a broker, you need to have an attorney, you need to have a CPA, right? I can connect you with Alex. He's someone that I would work with as a broker. He's invite only. I would not work with the company we use. I will not say their name, but they are the biggest brokerage firm for marketing agencies. I would not work with them ever. Myself, right? Most brokers suck. I know what's needed. I may help you sell your agency depending on where you're at and if I can actually help you. I've been doing a lot of work with like Cody Sanchez's group as a coach in that thing. So I know a lot of buyers that are buying agencies right now. Attorneys, right? Jeff Stoltz, I can connect you with. He's also invite only, but he can kind of do your M&A. Guys, we paid like $25,000 or $30,000, I think. And it was $30,000 in legal fees, right? Um, just for selling the agency. It is an expensive process, right? Um, a CPA, Mark, once again, I can connect you with. He is first come, first serve as well. And then my final words for you guys. I want to make way more money, like money where I can wipe my butt with $100 bills type of money, right? And I think a lot of you guys are the same. So what I've decided and what I've determined is that this is not a coaching business for me. I'm ultimately in the M&A and private equity business, right? My selfish intent for the coaching is to help you guys build stable agencies because once again, I'm not a coach who's going to get you to 100K the fastest. I'm the coach who's going to get you to 100K, but helps you stay there. Why? Because unlike other coaches who just want to flex how many people hit 100K, I want to flex how many agencies stayed at 100K and actually exit it. But most importantly, I believe that each and every one of you guys is capable of selling your agencies. And I want to take the top 10 and 20% of you guys, roll you all up. Who knows, in 2-3 years, that's my objective with like the best agencies that I can find in this group. And this takes your enterprise value from a 3x SDE to 5-6x SDE. You can literally double your valuation by rolling up with another group of good agency owners. Why? Because big money is lazy, right? Big private equity institutional buyers, they're not going to buy an agency that's doing $600,000 in profit. But if we find 5-6 agencies that are each doing $600,000 a year in profit, that's a lot more appetizing, and they're willing to pay a premium, which is why the valuations can go up. That is my objective, to roll some of the best agencies in this community up, and that's why I'm going to be giving it all my time. This is not a 90-day process. This is a marathon, not a sprint. This is a 12-month, 24-month endeavor. It's not the quick cash, it's the big cash. And with that being said, guys, I will open up the floor to questions, Q&A, if you guys have any about selling an agency, increasing the value of your agency, anything at all. No questions? You guys are M&A experts now?
Uh, well, this question is more about the agents, about like Estate AI as a whole, because I
Yep.
know you've mentioned that that you love the state AI so much. No, I'm just kidding. Um, but did you dislike a state AI because of the way you built it or because of it being an agency itself? Like what caused you to dislike it? Because I feel like it was just built in a way that led to you disliking it because of all the headaches. Was that the reason?
That's a really good question. That's a tough question, and I think that's hard to answer. I think from my perspective, I didn't like it because it was too small of an opportunity. And the way to make it a bigger opportunity, which Hermosi told us what to do, it's not what I wanted to do. And that's also that's the moment when we decided to sell. We decided to sell State AI after we just had our best month ever. We didn't decide to sell State AI because things were going to crap. We decided to sell because we knew that we were capped out because we didn't want to do what it was required to get to that next level. And the business was literally holding us back from achieving our true potential. I don't know if that answered your question, but don't get me wrong. The headaches were definitely part of the decision for sure. Um, cool guys. Any other final questions about anything?
Hey Jared, quick question for you. When you were selling your business, how important was it like for your buyers to consider your partner, like Matt or someone else in that process? Like how important is your partner in that selling
Oh,
decision?
yeah, it's super important because they're another part of the relationship, right? So the buyer isn't gonna buy the other partner out and leave the other partner unless they like the other partner. That's not gonna happen. It's gonna delay the process. I wouldn't recommend that. The buyer is not necessarily doesn't really care about the other partner because they're buying the business, not the partnership. The partners are going to be gone and out of it. So ultimately, the buyer has to like both people. If the buyer, unless you're dealing with private equity, if the buyer doesn't like you, they're not going to buy the agency most likely, unless they really, really like the business. But if they don't like you, they probably aren't going to like the business.
Mhm.
Did I explain that correctly,
Yeah,
Joe?
no, that makes sense. And my follow-on question is, which is lingering in the back of my mind, is if we need to find a partner in the agency business, right? Because there's always a sales component and there's always a fulfillment component. And so how do you like, does it matter when you get down to the selling process, right? So it doesn't matter because the buyer is buying your business as an asset, right? You said, but to yourself, like to you, Jared, like in terms of how much you give away or how much you guys share between you two, like how do you
Mm.
make that kind of equity sharing decisions there? Like,
Great question, dude. I don't think you need a partner. I know your agency very well. I think you need an
yeah.
integrator, an operator. And in addition to that, I think you can make that integrator an operator. And I would talk to Michael about this on his call on Thursday. That's going to be a fire call. I think you should just give away phantom equity, which is what we did as well in our agency to all of our key leadership members. They got phantom equity that was vested on a certain schedule. And I would recommend you do that rather than giving away real equity. Because having a partner doesn't make sense unless they can generate at least 2.5 times what you can
Mm,
generate in terms of some sort of revenue or profit. Or else there's no actual strategic benefit. You can
right.
always just hire that person out. And that's probably what you need. You probably just need an operator. I don't think you need a partner.
Mhm. That makes
Matt,
sense.
Matt and I, Matt and I really like ultimately Matt and I always knew we didn't need to partner on the agency. It was just easier. And like I know in the beginning, like I thought about buying him out. He thought about buying me out because like it's not needed for an agency to have a partner.
Mhm.
If you know what you're doing, you can always just hire someone out. Like I could have just hired someone to do Matt's job. He could have just hired someone. It would have been expensive, but to do my job. Right. So you don't need a partner. You just need to hire good talent.
Got it. That makes sense. Because I think that valuation part and how much you can sell it for, if you truly want to reach that number that can give you that financial freedom, right? It's hard to split that multiple times, with someone else. So
100%.
that makes sense.
100%. Cool, guys. Any final questions before we wrap it up?
I got a quick
Anything?
question.
Cool. Yeah, go ahead.
What's up, everyone?
Wait, I'm sorry. I'm
Is
so
it,
sorry, Melvin. Before you do you guys like
yeah.
mix of like the one-on-ones in the group, or do you guys still want to just
Yes, yeah.
do one-on-ones, or do you still want some sort of group component as well?
Yeah.
No, I think this is awesome. I think this is the first time I'm coming to this. I think this is the first meeting, right, Brandon? Right, Jared?
Yeah, yeah,
Yeah. So I love this. Thank you for hosting this. I
yeah.
think that this is, a lot of value. Just like even like for me, I'm super early on with my agency, and just seeing like your vision with everything is really cool. The question that I had was in regards to like the KPIs, and obviously I'm very early on. We're continuing to build, and we're chasing the bare basics of just LTV, monthly
Yeah, but you're
recurring, and all
crushing
that
it,
stuff.
dude. You're absolutely
Yeah.
crushing it.
Thanks, man. I just had a question about like, since you're around a lot of these brokers and a lot of these people who are ultimately buying these agencies, what do you think is the most attractive KPI that we should like really be chasing, other than like, the stereotypical ones that like most people talk about?
It really depends on the buyer. I'll be honest with you. It's a very loaded
Yeah.
question. Ultimately, at the end of the day, the only thing that truly matters is profit. And I think the one thing that people forget about is history, time. How long has the business been in operation for? People think they can run their agency for a year, 2 years, and sell it. You guys should be like, honestly, 3 years is short. If you guys really want something good, 4 or 5 years, not with different niches either. The same niche. That's a huge mistake I would have made. I've been in this space for 6 years. I've had multiple different agencies. If I would have stuck with one agency, one niche, one LLC with one consistent tax return for multiple years, company would have been worth way, way more. But because I kept switching different LLCs, different niches, all
Mm.
that stuff, my valuation definitely took a hit. One niche, just stick it out in multiple years with a lot of history. History is one of the most important things.
Okay, that's great advice. Thank you. And also to the room, feel free to hit me up. My name's Melvin. I'm new to the space. I'm definitely always trying to meet more people, so that's why we're all here. Hit me up, send me a DM or whatever it is, and let's
Heck yeah.
connect.
Guys, Melvin's doing some really, really cool stuff, different fulfillment than what anyone else on this call is doing. But it's absolutely crushing it. And I'm gonna probably have him come on and do a masterclass on what he's doing because I think it's super cool. But all in all, guys, that is a wrap. If you have other questions, I mean, you can Slack me, Facebook group me, whatever. And Wednesday we got a CMO call, which is tomorrow with Jason and Luke. Bring your ads ready, B2B. Everything, guys. They manage my agency ads. $30 million in agency ad spend, and they are so freaking good. Like, so good. Best media buyers I have ever seen. Period. Period. And then Thursday, we have Michael, who ran and operated 2 7-figure agencies, not as an owner, but as a literal employee and operator, which is super interesting because I think that'll open your guys' mind. He literally came into his last agency and got the owner out of the day-to-day, and he literally took like 2 or 3 week vacation and didn't check Slack at all. The owner did, because of Michael. So make sure you hop on that call, guys, and we'll keep dropping value. I'll probably shoot you guys over a message to ask for feedback on these calls, and I will talk to you all later. Peace. Yo, I hope you guys enjoyed that video. If you liked it, make sure you smash that like button, hit the subscribe button, and turn on bell notifications so I can see you in the next one. And last but not least, make sure you guys check out one of these fire videos that the YouTube algorithm just hand selected for you. And guys, if you want to work with me on a one-on-one basis so I can help you scale your agency and take it to new heights like I've done in the past, because I've built 2 7-figure marketing agencies before I could legally drink, go ahead, click down below, fill out an application, and I'll see you guys soon. Peace.